Alright, hello everyone. How are you today? It's Kei. So this is the 28th of June. On Tuesday, looks like JPY pairs are active today. And I took one trade, CADJPY. I took the buy and already exited with a break even. So I will talk about how I took the trade and how I exited on this. So today is my big day actually. I had lots of phone calls, lots of meetings. So I think this live stream may be a bit shorter than usual, maybe 30 minutes, 40 minutes. But let's see how far I can go. Alright, so yeah, let me switch the screen. And so as usual, as a disclaimer here, this YouTube channel is basically all based on my own experience and knowledge. So when you take trades, please do at your own risk. And also this is live, so if you can please follow the rules and guidelines on the chat, that would be great. And recently, so many spams on social media, so please be careful. People use my name and spam others, so please be careful. Yeah. So let's see. Anybody taking any trades right now, or anybody took any trades today? Looks like market's active today. So let's see. So first, let me remind how currencies are doing based on the strength chart. So I put this strength chart. As for the news, we have no big news. Actually, there is one Euro ECB's president regarding speech at 5:30 p.m. UTC, but that's it. As for the big news. And as for the strength chart, you can see that the JPY has been quite weak today. And I think this weakness of the JPY continues until maybe September, October. So I'm expecting the JPY pairs will be continuously bearish, in fundamentally speaking. And also USD is strong today, and AUD and Canada, CAD, AUD are also bullish. So if you took the trade on the AUD, JPY or CADJPY, then you may be able to make some profits. Looks like right now it's retracing. Right now JPY is retracing back, JPY is getting stronger, and CAD, AUD are getting weaker now in the short term. So the market is retracing backwards. But overall today, CADJPY and AUDJPY are pretty strong. So I check the strength chart usually to see how it's going on each currency. And then I check charts. So I will go down to here. And so today I took the CADJPY trade. I took the trade here. This is a daily chart. In the daily chart, it's flat, so I didn't follow the daily direction. So I usually pick either daily chart or the 4-hour chart to follow if one of these are trending right now, according to Ichimoku. And as you can see on the daily chart, Kumo flat, Kijun Sen flat. So this is basically range. There is a shallow breakout of the previous resistance level, but this is not a key level. So I just ignore this one. And then I was looking at the 4-hour chart, and 4-hour was bullish. Right now it's flat. According to my strategy, right now Kumo Senko Span B is flat, Senko Span A is moving up, and Kijun Sen is flat right now. Tenkan Sen is up, Chikou Span above candles. So when I see this Kijun Sen flat and Senko Span B flat, I will stay away. So for now, I stay away. But when I took the trade, it was looking like this. It was like this. Kumo was up, Kijun Sen up, Tenkan Sen up, and Chikou Span above candles. So I was expecting the market goes up continuously. So this was my first thought. And then I was on the 1 hour. 1 hour was also bullish. I put the lines here. When I took the trade, it was exactly here. So let me go back a little bit. Right, so the Kijun Sen Kumo were bullish. So this was the candlestick in 1 hour that took the buy. Because I saw the Kumo up, Senko span B up, A up, Kijun Sen, Tenkan Sen both bullish, and then Chikou span above candles. And also I do look at the Kumo shape. Make sure Kumo is not too thin. If Kumo is too thin, then that means the market is overbought, so the retracement might happen soon. But I saw the stable Kumo, and 4 hour also a stable and thick Kumo. So this is good setup to follow uptrend. So when I saw this, when I saw 4 hour up and 1 hour also up, then I took the trade in a 5 minute. You know, usually I take the trade in a 5 minute. This is in multiple time frames. I don't use the Ichimoku on the lower time frames, but I use the Bollinger Bands and stochastics and so on. So this was actually my entry. Over here, my entry was 105.959. This was my entry. My stop loss was down here. I took the stop loss of, let me remind, took the stop loss of about 23 pips or so. So it was down here. I put the stop loss here below the previous low in the 5 and expected the market goes up continuously. In the 5 minute, when I took the trade, it was very nice, looking very nice, consecutive bullish in the waves, starting down from here, consecutive bullish in the waves. So the market was looking okay. And then it was also supported by the trend line. Once, twice, 3 times there were bounces. So it was a nice setup. And also the market was actually on the band walking. So I get these multiple confirmations and I took the buy here. And I put the stop loss 23 pips below the position. And I take 2% risk per trade, 2% of my whole account to the stop loss. So that means if the market goes backwards and hit the stop loss, I lose 2% of my account. Yeah, that's what I mean by the 2% risk per trade. I took this one and took the buy here. And in this case, you see stochastics is above 80%, 80 level. And when you usually see this, you may think that this is overbought, but for me it's not. Because this is uptrending in the 4 hour and 1 hour. So usually the oscillators like stochastics, RSI, or MACD will show overbought in the lower time frames. So this is natural. Overbought in the 5 minute, but not really overbought in the 4 hour or 1 hour because Kumo was very thick. So I still take it and expected the market goes up continuously this way. So that was my initial thought of this entry. Okay, so and also when you see the 5 minute has been up all the way up like this, you may also think that this is overbought, but for me it's not. Right? Again, 4 hour is bullish and 1 hour is also bullish. So 5 minute should look like this. And in this case, I don't wait for the retracement. Simply when I see this good setup, I simply buy and expect the market goes towards my direction afterwards. Actually, I took this trade with the Ichimoku Zoom Cafe today together with other Ichimoku members. So yeah, if we are there, you know what I'm talking about. Yeah, and then so we took the buy here. And we took the stop loss here at 105.73. And what happens afterwards was was that the market initially went up. Still, it was supported by the trend line. And the market initially went up all the way like this. And then started to be in a range. Started to be in a range like this. And when I saw this, the 4 hour, I was actually watching the 4 hour still. And 4 hour was still showing up. So I still expected the market breaks the P wave bullish in this direction. So I always follow the major direction. If 4 hours is bullish, I always follow the major direction, and it doesn't really exit by that. Okay, so I saw the P wave, expect the P wave break bullish, and also what's more, there was a, this is called inside bar. If you look at this candlestick, this bearish candlestick over here, the high and low of this bearish candlestick has been including future candles like this. So my buy was here, and I saw the P wave above my position, while 4 hour still bullish this way. And I saw the P wave in engulfing candles in the 5 minute. So my thought when I see this was, if the market breaks the P wave and also the engulfing break bullish, I will set the stop loss to break even. So I was simply waiting for that. And if the market goes backwards, if the market breaks P wave bearish and breaks this engulfing candlestick bearish, then it may continue to go down, or it may consolidate for a couple more minutes or hours, was my expectation. So I was simply waiting for that, waiting for either scenario to happen, whether it goes up or down. So this is where you have to be patient. Yeah, you don't simply exit just because you see the P wave. You don't simply exit just because you have this engulfing candle. Yeah, if higher time frame still bullish, the market most likely breaks the resistance and goes up. Was my mindset. So I kept watching, monitoring the chart. And then it broke bullish like this way. Right? So when I see this breakout, the close of this, of the most recent candle's high, the close for the most recent candlestick was above the resistance in the 5. You see exactly this bullish candle's close became above the resistance. And this is exactly when I moved the stop losses to the break even. So that even if the market goes backwards in a 4-hour chart or whatever time frames, I don't lose in this case. If I keep the stop loss down here still, the market may shoot down for any reasons. If there is no even if there is no fundamental news, it may just spike and just go backwards, go back to the stop loss in a few minutes. Sometimes it happens in Forex. So I make sure that I don't lose is a key to success. So I moved the stop losses to break even and then just left the chart. And afterwards, what happened was, after this, I actually ate the lunch. Yeah, and also I left the chart PC. Simply, I closed my chart. I turned off the notifications on my mobile. I simply closed the app on the mobile so that I don't receive any information and completely leave chart. Is what I do for the next couple hours. And then I had another phone call in about 1 hour. So I came back to PC 1 hour later, or I think it was 1.5 hours later. I came back to the PC and then found the market just went backwards. I think, yeah, on this big spike, my position was cut and this was my exit. So this trade was in a break even. So initially it went up, but it didn't go up furthermore. If 4 hour is bullish, my thinking is that the market goes up on the end wave consecutively like this way. The market should be supported at some point, maybe supported at the previous resistance, and goes up was my view, was my expectation. But for some reason, well, there was no big news, but for some reason, the market just went down and hit my break-even trade. So it was my break-even trade. So, but when I came back to the chart, it was around here. I came back and found my position was taken with the break-even. Yeah, so this is my entry and exit for today's CADJPY trade. Yeah, but like this, you know, the first important thing is not to lose. That's why I say this on the cover page. I say how to become a non-losing trader. To make sure your losses should be kept minimum or break-evens. So that's the first thing you have to learn when you are still not profitable or when you blow accounts. Yeah. So you manage the stop losses to break even at the right timing like this. And then, so that was my exit. So in this case, again, I took the buy here. I took the buy here. And I exited over here with a break even. And this is totally okay because if I keep trading in this manner, then let's say 3 out of 10 trades, the market goes up continuously this way. And I can get some extra pips along the way, right? But if you don't move the stop loss break even on this big spike, it may hit the stop loss, right? Or it may, you know, close below the stop loss, and you may have more big drawdowns than you expected. And this is not really good, actually. Not really good in psychology, and not really good in terms of the risk management either. You don't want to lose more than 2%. 2% should be your maximum loss. You never lose more than 2% of your account should be the rule. So that's how I took the trade on the CADJPY today. So right now the market is ranging, so I'm not gonna enter right now. So simply I will stay away and probably come back tomorrow. Looks like markets are quiet right now. But this is a type of a trade that I do every time. Sometimes I also do lose, and my losses should be kept minimal, and these losses should be logically done, and these break-even timings also should be logically done. Yeah, before I used to do like this. Before I took the buy here, let's say took the buy here, and the market goes up initially like this way, and as soon as I see this big breakout, I used to move the stop to break even like this because I didn't want to lose. Yeah, and then oftentimes the market just retraces backwards and hit the break even and then goes up on this way. Yeah, but you never move the stop losses in this manner because this is too early timing. Yeah, because I used to do this also. Like I had too many break-even trades. Like out of 10 trades, my break-even trades were maybe 5 or 6. If I didn't move the stop loss break-even, I was, making, lots of profits. But because I moved the stop loss break-even too early timing, the market just took it and then went off without my positions. And that's why this is also another good example of the break-even timing should be also exact. In this example again, I moved the stop losses above my entry after I see this P wave and also the resistance breakout. Because when you see the P wave like this, you will never know which way breaks. 4 hours bullish, so yes, potentially it breaks bullish, but it may break bearish again in the 5 and then be supported at the previous resistance and then it goes up. That is possible too. So this is also, too early timing to set the break even. You only have running pips of like 8 or 9 pips. This is too tight to break even. Yeah, so that's one. And then you wait for the breakout. Wait for the breakout like this, and then move it to break even. This is a perfect timing for the break even. And the reason is because of this N wave in the 5 minute. N waves are the confirmations for the market directions along the way. If you don't see N wave, then the market is not trending. If you see N wave, that means the market is trending on that specific time frame. So let's say if this breakout doesn't happen, and let's say after the P wave, it breaks bullish, but it doesn't break the resistance, then I don't move it to break even yet. I don't. I wait for few more candles to break the resistance and move the stop losses to break even. That's what I do. In this case, when I see the market breaks the P wave, but it doesn't break the resistance, I'm not gonna move it to break even. I will just keep the stop loss as the original place, and then afterwards, the market may range because buyers are not here. That's why it didn't break the resistance. So buyers for the long term and sellers in the short term fights here. So the market spikes in range. And eventually, if the market breaks bullish this way, then I move the stop losses to break even. But if it reverses backwards, and if it goes down this way and breaks and actually retraces back to my position level, I still keep this. And I don't move the stop loss yet. But if 4 hour becomes flat here, then I get ready to exit with small loss. If I start to see double top, for example, double top or the triple top, and after that, when I start to see the reverse N wave, for example, then I will exit. Even before the price hit the stop loss, I will exit, because if 4 hour becomes flat, that means the Kijun Sen in 4 hour is flat, right? And when Kijun Sen 4 hour is flat, that means the market may retrace back to the 4 hour Kijun Sen. And the trend reverse starts from the lower time frames. So this can be the beginning of the reverse, and the market may continue to go down to the 4 hour Kijun Sen. So when I see this retracement while 4 hour becomes flat, this is when I look for an exit timing. most likely if I see double top or triple top or head and shoulders in the 5, neckline break and reverse in the wave, I will exit in the 5 minute. Based on the 5 minute, I will exit. Yeah, in this way, the sellers are coming in because of this reverse in the wave. And you may think that the market may go up from here. Why would you exit? Because it doesn't hit the stop loss yet. And that's because I don't lose just because I don't want to keep holding this trade while seeing the potential reverse is my answer. Yeah, I don't want to keep holding knowing that the market may reverse. If I see the potential reverse pattern in the 5, then I will exit before the price hit the stop loss. If I exit here, my drawdown will be maybe 0.5%, less than 1% even. So I can save another 1.5 potential loss to use it for the next trade. But if I lose 2%, then I lose 2% of my account and I have to decrease the lot sizing for the next trades. So keep the losses minimal is also my strategy, and that's something that you also have to practice. So the market retraced backwards and then it hit the stop loss. But in this example, the market went up, broke the resistance here, so I moved the stop losses to break even. And then I'll simply leave chart for a couple of hours, and the market just shoot down all the way like this on this candlestick, and I exited with a break even. So that was my break even trade on CADJPY. So at first, I think it's kind of difficult to accept the losses, accept the break evens, because sometimes even after the market reverse backwards and hit the stop loss, it goes up towards your direction. But this one, you didn't see this. And according to your own rule, this should be your exit timing. So there's nothing to worry about. I mean, nothing to be sad. Even if you can't, if you couldn't capture this next uptrend. This is the FOMO, typical FOMO type of thinking. And if you keep thinking like this, you feel like you're missing all the entries, all the pips potentially. But this is unreal actually. Even if the market goes upwards afterwards, it's okay. You can just capture the next trend, and because tomorrow will be there, it should be the correct mindset. Yeah. So, and let me see, right now the market is ranging. Market's ranging now. As I see this is like double top. Here's a neckline. So for me, this is reverse. This is downtrend in the short term. Most likely, I think the market goes down along the way. In the short term is my view, because I think 4 hour is now flat. Yeah, you see 4 hour is now flat. So the market could retrace all the way back to the 4 hour Kijun Sen. If you sell right now, target should be 104.871 level. A 4 hour Kijun Sen should be the target to sell. But in this case, again, I don't sell just because the market is reversing, because I don't see downtrend in the 4 hour. I don't see downtrend in the lower time frame. This is called the range. So the market may continue to be range. We never know. I say this is bearish because the highs are lower and lower. There is double top. Neckline has been broken bearish. This is, I think, hold on. I think neckline is about to be broken. Maybe this candlestick will confirm the breakout of the neckline. And then it should go down this way in a short term. So yeah, for me, this is bearish. Stochastic shows dead cross, band walking, downside. So I think this is bearish in the short term. However, I don't take the trade here because there is no trends on the higher time frames. And when there is no trend in the higher time frames, the market can be spiky. It may break the support, and then this may be a fake out. The market goes up to the previous resistance level, and then it even may break the resistance and goes down this way too. Because this is where the fight between the long-term buyers and short-term sellers are happening. We have to always think about the buyers and sellers in different terms. The long-term buyers still holding the buy because they follow the 4-hour uptrend. These long-term buyers are keep holding the buys after the Kumo breakout in Ichimoku. So these buyers are still there, and these buyers still happy because they're running profits. So for them, there is no reason to exit right now, because just because of this small retracement. Yeah, and also 1 hour. When you look at the 1 hour, there's a 1 hour long-term holder, long-term buyers too. The long-term buyers in the 1 hour have been keep holding the buy above the Kijun-sen, above the Kumo, like this. So they're also running profits. So there is no reason to exit for them still. But once the market starts to break the Tenkan-sen, then some of them may start to exit. And when the market really breaks the Kijun-sen, then more of them will give up and fix profit or fix loss on these buyers. And now, as for the sellers, sellers are here in a 5-minute. In a 5-minute, the market broke the Kumo. The market is below the Kijun-sen now. So in the 5-minute, there are sellers. I mean, exactly from here at 11:20 UTC today, the sellers started to be here, and they start to run profits right now. That's why I say this is where the fight between the short-term sellers and long-term buyers are happening at this stage. So you see the market is going down right now. It's about to break the support, but this might be a fake out in this case because the fight will be getting stronger and stronger as the market retraces. And this is the reason why I don't sell here, because the market can be very spiky and very tricky. Yeah, I used to trade like this. I used to see the reverse double top neckline break at the 5-minute. Let's say there was a daily resistance over here. It's double top neckline break. I see the breakout, so I used to sell here. I used to place sell right now, put the stop loss above the resistance, maybe here. This is a stop loss. I used to put the stop loss above here and keep holding so that I can capture the most profit as much as possible on this on the market. But oftentimes it fails actually. What may happen here is that the market may not go down straight towards the direction. It may go down initially, but then retrace backwards, and it may be range for a couple of hours, couple of days sometimes. It goes range for a long time, and the market loses its direction. Sometimes it goes up, spikes it, takes a stop loss, and then retrace and continue to be range. I've seen these patterns many times when the market is retracing the 5. So yeah, I mean, we can't really trust the reverse, so that's why I don't sell. this is also based on my experience. So yeah, I gave up on the dream to sell at the top, buy at the bottom, but wait for the trends to come in the higher time frames and follow the big trends. So for the scalpers, I think it's okay to sell at the setup like this, but you may have to exit in 30 minutes or so. And for me, that was too busy, so I decided not to do it anymore. But yeah, that was my trade on the CADJPY today. It was a bit spiky. Initially, the market went up actually, and then for some reason, the market just went backwards and hit the break even. So yeah, at least I didn't lose any money. So it was just fine. We have to trade with a break even or win gain, or break even or small loss gain in the long term. That's the only way to be able to keep surviving on these rough markets. Yeah, alright, so yeah, thank you everyone for joining today's live stream. Good to see you here, good to see you. So as I mentioned earlier, today I had a big day. I had many phone calls and meetings, so I guess I will be ending live soon, about in 5 to 10 minutes. But again, thanks for joining. I hope you learned something new from today's live stream. Let's see. Milos says, Mr. K, is there a way to tell Kijun-sen can hold as support or resistance, or if the market will blow all the ways past the Kumo? There is no way. There is no way to tell actually. Simply we have to monitor chart, and when it breaks, when the market breaks the Tenkan-sen, then it may go down to Kijun-sen, and when the market breaks Kijun-sen, then it may go down to the Kumo. That's all I can say. Yeah, we can't really expect these future markets, how it's moving, whether the market breaks Kijun-sen or not, whether the market breaks Kumo or not. There is no way to tell. And you don't have to know. You don't have to know whether the market breaks Kijun-sen or not, or Kumo or not. Simply when it does, you follow. Simply when the market breaks resistance, you follow. When the market breaks support, you follow sell. Otherwise, you stay away, because nothing is predictable in this market. Yeah, this is actually based on my experience also, and you have to know really deep in your soul about this mindset. Yeah, there's nothing to predict in the future. Like as Goichi also says, we are not here to predict the future, but we are here to see the market as of now, and that's all we can do. But if we understand the market correctly in terms of how the market has been moving so far, all the way back here, let me take the 4 hour. If we know how the market has been moving up until today, the history, if you know the history, and if you know the presence of the market as of now, how the buyers and sellers doing on the short term to mid term to long term, then you know what to do. Is the idea of the Ichimoku original teaching, and I 100% agree with that. Because in the future we can't see, so the market is retracing back now in the 4 hour. So I say when the market retraces, when the Kijun-sen flat, I say the market may retrace back to Kijun-sen, but I will never say the market will retrace back to Kijun-sen. I never say that. I say market may retrace back to Kijun-sen. Because if you believe when Kijun-sen flat, the market reverse back to Kijun-sen, then if the market goes up in the middle of nowhere, if the market goes up from here, then you can't, you don't know why. You don't know why the market suddenly goes up before it touches the Kijun-sen. So it's better not to believe like in what condition what happens, because Forex or trading is not always like 1 + 1 = 2. 1 + 1 equals sometimes 0 or sometimes 3 or sometimes 2.1. This subtle difference makes us very profitable, I think. The way of thinking like this makes us really profitable. Yeah. But it's also true that the market goes through the Kijun-sen. So when you see Kijun-sen, the market goes through up and down through the Kijun-sen. So that is true. So right now it's retracing, Kijun-sen flat. So I think the market goes backwards. It may break the Tenkan-sen and goes down to the Kijun-sen. That's possible. I hope that makes sense. But there's a tendency. For example, if Kumo is thick, then it doesn't really break. The market does not really break the Kumo when the Kumo is thick. That is a tendency that we can tell. Like here, the market breaks the Kumo where it's very thin. It's easily penetrate. But when the Kumo is thick like this, it doesn't break, but it was held, it's supported, and it goes towards the opposite direction. This is a tendency that we can tell by the Kumo, and also when Kumo is thin, the tendency is that the market is overheating, so it may retrace. And when it retraces, or Kumo thin, then the retracement can be very, very aggressive. It's also true due to the tendency. So there are some tendencies, but nothing is 100% is also true. And yeah, we all have to see charts and analyze and take trades in this mindset. Nothing is 100%. Otherwise, you will confuse yourself. Like, Kei said, when Kumo's up, Kijun-sen up, Chikou small bar candles, it's bullish. He said that the market is bullish, the market should go up. But when it really retraces, you can't come up with the reason why. Because you believed too much on one strategy. But if you keep doing it, then yeah, it becomes harmful in terms of the money and also the psychology. Yeah, but yeah, so right now it looks like the JPY pairs are retracing. I was also watching the new breakout. I think it was Euro JPY. Yeah, Euro JPY is about to break the resistance, so I'm waiting for that to happen. Still, Kumo's up, Kijun-sen up, so I think the market breaks. And the USD JPY is also about to break the resistance now. Yeah, Pound JPY is also in P wave. This is P wave, no trends. And AUD JPY is also in P wave. I'm still waiting for the break of the P wave bullish to buy, to look for the buy chance. Yeah. And CADJPY is, yeah, it's bullish in the 4 hour. Sorry, flat in the 4 hour. So it's retracing back now. And Swiss franc JPY has been bullish. But again, Swiss franc pairs are a bit spiky and tricky, so I prefer to stay away for now. I see too many dojis, too many pin bars in the 4 hour, so I can tell that the market has been very spiky in this. I'm actually thinking to take out all the Swiss franc pairs on my watch list because Swiss franc pairs are very spiky, especially recently after the wall breakout, especially since last year. The Swiss franc pairs behaviors has been changed a lot. When I backtested it a couple of years ago, before the COVID, the Swiss franc pairs were more stable. But recently, it has been very spiky, very ugly. So yeah, I may take them out from my watch list. When I do, I will let you know. Okay. Yeah. So again, I'm sorry, I think I will go because I had a big day today, but at least I want to share how I took the trade on the CADJPY, and hopefully you refer to my trade, you refer to my entries and exits, and hopefully you could learn something new from today's live stream. So yeah, I'm so excited to come back to Japan to visit next week. So I'm actually planning where to go, what to do, and packing some luggages now. So yeah, again, thank you for joining everyone. I hope you have a great day and week this week and today. And I will see you in the next one. So until then, please stay healthy and stay safe and stay gold. Alright, bye for now everyone. Mata ne. Thank you so much.